Solved problems: calculation of net sales, preparation of depreciation schedule, statement of profit, statement of changes in equity, and statement of financial performance. There are three problems altogether here. 1. To find out the net sales. Problem 2. To prepare the schedule of depreciation for 5 years. And problem 3. To prepare A. Statement of profit and loss, B. Statement of changes in equity, and C. Statement of financial position. Problem 1. On January 4, 2022, A sells 10,000 of glass to B on account. On January 20, 2022, A grants an allowance of 1,500 to B because of some of the glass is defective. On January 31, 2022, before preparing financial statements, A estimated that an additional 500 in the sales returns and allowances will result from the sale of B on January 4, 2022. Prepare journal entries and compute the net sales. Solution: journal entries. On January 4, 2022, A sells 10,000 of glass to B on account. Journal entry. Date: 4th January 2022. Accounts receivable debit 10,000 to sales 10,000 credit, being the goods sold on credit to B. Journal entry 2. On January 20, 2022, A grants an allowance of 1,500 to B because some of the glass is defective. Date: 20 January 2022. Sales discount debit 1,500 to accounts receivable 1,500 credit, being the discount allowed to be for defective goods. On January 31, 2022, before preparing financial statements, A estimated that an additional 500 in sales returns and allowances will result from the sale to B on January 4, 2022. Date: 31st January 2022. Sales returns debit 500 to accounts receivable 500, being the sales returns by B on sale to him on 4th January. Calculation of net sales. Sales 10,000 less sales discount for defective goods 1,500 less sales returns minus 1,500. Net sales 8,000. Problem 2. XYZ company purchased equipment on January 1, 2012 for 112,000. The equipment had an estimated useful life of 5 years with an estimated salvage value of 12,000. XYZ uses straight line depreciation on all assets. Compute for the depreciation expenses and prepare a schedule of depreciation table for the whole 5 years. Solution: computation of depreciation expenses. Working: particulars, date, amount. Cost of equipment 1st January 2012 112,000 less salvage value 12,000. Usage cost of equipment 100,000. Estimated life of the equipment 5 years. Depreciation method used straight line. Therefore, depreciation per year is 100,000 by 5 is equal to 20,000. Depreciation table for equipment. Year: book value at the beginning of the year. Depreciation for the year. Book value at the end of the year. Year 1. Book value at the beginning of the year 112,000. Depreciation for the year 20,000. Book value at the end of the first year 92,000. Year 2. Book value at the beginning 92,000. Depreciation per year 20,000. Book value at the end 72,000. Year 3. Book value at the beginning 72,000. Depreciation per year 20,000. Book value at the end of the year 52,000. Year 4. Book value at the beginning of the year 52,000. Depreciation per year 20,000. Book value at the ending of the year 32,000. Year 4. Book value at the beginning of the year 32,000. Depreciation per year 20,000. Book value at the end of the year 12,000. This is the salvage value. Problem 3. Based on the trial balance below, prepare the following: A. Statement of profit and loss. B. Statement of changes in equity. C. Statement of financial position. A. Constructions. Trial balance for the year ended December 31, 2022. Particulars: debit, credit. Cash: debit 35,000. Receivables: debit 95,000. Inventories: debit 65,000. Office equipment: debit 80,000. Accounts payable: credit 12,000. Notes payable credit 52,000. Loan payable credit 80,000. Capital credit 120,000. Drawings debit 10,000. Sales credit 80,000. Wages expenses debit 34,000. Utility expenses debit 15,000. Selling expenses debit 10,000. Total debits 344,000. Total credits 344,000. Solution. In the books of A Constructions, Statement of Profit and Loss for the year ended December 31, 2022, particulars amount: sales 80,000, expenses, wages expense 34,000, utility expense 15,000, selling expenses 10,000, total expenses 51,000, profit 80,000 minus 59,000, 21,000 is the profit. In the books of A Constructions, B. Statement of Changes in Equity for the year ended December 31, 2022. Capital 120,000, less drawings 10,000, add profit 21,000, total owner's equity 131,000. In the books of A Constructions, Statement of Financial Position as on December 31, 2022, particulars amount: assets, current assets, cash 35,000, receivables 95,000, inventories 65,000, total current assets 195,000, non-current assets, office equipment 80,000, total assets 275,000, liabilities, current liabilities, accounts payable 12,000, notes payable 52,000, total current liabilities 64,000, non-current liabilities, loans payable 80,000, total liabilities 144,000, owner's equity, capital 120,000, less drawings 10,000, add profit 21,000, total owner's equity 131,000, total liabilities and equity 275,000.
Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.